It's the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So this is analysis for March 22nd, Tuesday 2022 tomorrow. So we had a very stiff resistance in the market today, right? So the market posed up a big rally of 10% recovery from the bottom, and it is at a gap support, window gap support. So let's analyze and see. So as usual, we'll be doing the pre-market analysis based on all the parameters that you see on the screen, on the charts on the left side, and also we'll have some data analysis on parameters that you see on the right side. So we have the charts here. So it's a big down day. It's an engulfing pattern. That means the previous candle is almost completely engulfed by this candle that is formed today, the bearish wide range candle, and it is taken a support of at the gap, between this candle, green candle, and the bearish candle. So it's between previous day's gap. BANKNIFTY also has taken a gap support, and it is a bearish wide range candle, and both are bull traps. That means it gapped up and moved high and then fall down, trapping the bulls who thought that it's going to move up. Right? That happened in both. And BANKNIFTY, it's wide range. It almost engulfs the previous candle in BANKNIFTY also, if you don't consider the wick. So totally it was clear bearishness that was evident there today. Intraday, if you see, this is the price action. Right? It's 21st starts here. So it was gravestone doji kind of candle. That means it's gapped up, trapped the bulls, and then it was trending down. So very trending down. So same thing happened on BANKNIFTY also, trending, taking a breather and then trending down, taking a breather in, trending down, and that's the kind of day today was, right? And Bollinger Bands, what do they say? It's the same. The volatility would be there because the bit between the bands are high, and consolidation has started. The market is not trying to move up, nor trying to go down. So, overall in the short medium term, if you see, it's kind of consolidation is what the bands are indicating for sure. Support resistance level, you can see that the support immediate will be 17,000, 7,050. That's the gap area. And if that support is broken, then you have 16,800 to 16,900, which is Fibonacci 38 retracement level. So below that you have 16,700 or 16,750. Below that 16,550 to 650. And then you have another gap that is there, which is acting as support, as 16,450, 350, 450. That is Fibonacci that 50 level support also. So those are the good supports that you see outside. You have the 200-day moving average support also here. And on the upside, if you see, the resistance immediate will be 7200, 300, where it had slipped down today. And then above that is 7350, 7400, the 7400, 17500 to 7600, which is Fibonacci 23 retracement also. 17500 is going to be a very good space. And any close above that would indicate that markets may be going higher up. Until then, you never know, it's neutral. BANKNIFTY also, it is taking the support of this gap, and support gap is near to 35,900 zone, near to 36,000 zone, and if that gap is given up, then you have the 35,300 to 35,000 to 35,300 Fibonacci 50 retracement zone. If that is given up, then you fall down to 34,350 to 750 that zone, and then you have a gap. Another gap which we could act as support at 34,000 level, which is also Fibonacci 16 retracement levels. On the upsides, BANKNIFTY has got a major resistance that it has to clear, which is at the 37 to 37,500 Fibonacci retracement 23 level also. So that level has to be cleared before it can move further up. Because with confidence, if it does move up, this gap that is, so in the case of Nifty, that gap is already cleared, and another gap support is what you see here. Here BANKNIFTY is there, gap support is there, but not top. You have the major gap that is created long back, which needs to be cleared. So that's a major hurdle. 36,900, 37,000. 37,000 is a hurdle, 37,500 is a hurdle, then 37,800 is a hurdle, then we have 38,000 hurdle above. So actually there is a trend line, and it is an attempt to break out. You never know it is that attempt is succeeded or not, right? If it is falling back to a trend line again, then it means it failed. Right now we can say that it attempted to break out. It is attempting to break out from the trend line downside, right? So that's the resistance levels. So just to wrap up, basically 169 points lost today, right? No, it's almost 1%. It's okay after this such ferocious rally of nearly 10% in 8 days. No, it's okay to give up less than 200 points, right? And it formed engulfing pattern. We have seen that, and that it's below the 50 DMA. So 50 DMA is the resistance that you can see, but window gap support is the downside. 200 DMA support is also there. Price action is trying to attempt to break out. Double top end pattern is still there within the higher time frame. Bank Nifty lost 410 points, 1% only. And it is also having a wide range. We have seen that. And the gap support above. That's also about DMA and 200 DMA and 20 DMA. It's fine. And gap support is also there. But 200 DMA is, sorry, 200 DMA is not cleared for the Bank Nifty. Make a note of that. So 200 EMA and the gap resistance is still something that means that gap that we had seen in here, the gap here and the 200 EMA both are to be cleared. Intraday we have seen that, Bollinger Bands also we have seen that it is a potential consolidation. Moving ahead, momentum is sideways. You can see that it has taken a bend. Momentum RSI momentum has taken a bend. That means it is resisting at the 60 support, 60 bullish zones. So there is huge selling pressure. There is what the momentum is indicating there. And then the Bank Nifty also it is taken a bend. That means there is resistance. So it's sideways both. Medium term also it is sideways. And but medium term it's not there in the charts here. Medium term, so the weekly charts are showing that it is a bounce up from the 40 support. There is also good bullishness, but overall sideways at the momentum. Trend, you can see that it had crossed over to the bullish zones and continue to be there in both the indices on the short term. In medium term, it is bearish only. It is not the trend crossover as in the medium term has not yet happened, and it is also a rising strength. Strength of the trend bearishness is rising on the medium term, but short term you have a trend that is bullish, but it is a weak trend. Volatility, you can see it's 9%. Again spike up. 9% or something was gained, was cooled off the other day. Now it is spiked up back, and 24.6 is still a high volatility level. That's where we are now. Implied volatility is 27.6, and IVP is also at the top green. So 24 above, still a lot of market volatility will be there. Even today, even though it was trending downside, you know the breathers that it take, it goes down and then goes up, then again goes down. So it was trending, but the volatility is too much to handle because stop losses get triggered. Kind of movements that is happening, is ferocious. So it's difficult to handle because volatility is still high. Open-interest analysis, if you see, you can this is for the 24th March, Thursday, weekly expiry, and 16,000 and 18,000 is the level. What kind of it's 2,000 point. Now the Nifty is what the buyers and the sellers and looking for support and resistances, right? That's where the maximum put trading and call trading has happened. 16,500 and 16,500 and 70,500 was the next places where the put and call trading you see, right? And 36,000 and 37,000 point is the range of the highest put and calls in the Bank Nifty. 35,000 and 36,500 is the next level of support and resistances. It was heavily bullish yesterday, but on the previous day, Friday, put call ratio. But put call ratio now it is given up to 0.54 and 0.6 is very close to bearishness, not bullish at all. And it is clearly a futures of interest build up is showing that it is a short build up definitely that happened today. Look at that red all over, only the HDFC Bank and Nifty showing small slight green. All sectors are down except pharma and metals, and some smaller sectors like chemical and fertilizer, etc. So it was kind of a side, down day. Basically, it is clear. Yes. So you see, looking at the index here, you can see that it's a red close on HDFC. It was for the HDFC Bank. It was a big move, but resistance is there upside. It is still not hit the bullish zones. So, but the recovery is happening. But make note that there is resistance on the. It's still not bullish yet in the momentum perspective also. HDFC also closed that. Momentum is rising up, but not hit the. Not fully recovered from this sub resistance zone. So only if you see a green close above that would mean the downside channel breakout and a bounce up from the resistance, right? That is yet to happen. Momentum also is catching up to get in the bullish zone. So it's recovering, but wait and watch. Reliance is close green and it is trying to break out, almost broke out, you can say. But you may have to wait for some more time to get a confirmation on that. Just climb to the bullish zones. And the Infi also. Yeah, Infi is closed right today. IT for some reason is bearish today. Momentum is and the managing to be at the bullish zones. But some kind of big sell-off has happened. It is very close to all-time high. So obviously, this is not the zone for entering into the stocks, because once the ATM breakout, all-time high breakout happens, then you can think about it. Even TCS also did not do well. It's sideways momentum, but it was bouncing up nicely from the channel bottom. ICICI Bank also sideways momentum. It is facing resistance today, and the previous support zone from where it had long back slipped down. Kotak Bank also red sideways momentum. The bounce up seems to be met with a resistance there. So overall it is down as all sectors. So all heavyweights are indicating that, but Reliance is showing green, which is the only sector that we need to watch out, right? Because that's the only sector that is performing as not sector, only heavyweight that's consistently performing in the bull zones. For sectoral performance, if you see, IT was down for some reason, 0.75 IT down, and momentum is sideways. Metal is close green and it is a bullish zones, 1.5% up. And medium term also is also bullish, but the only thing is it's at a breakout zone. A very crucial resistance was breakout is happening in progress. You just need some confirmations of a green close full candle above that before you jump into it. But you can get in, it's the right time to get in, but you have to be just slightly cautious until that confirmation of that breakout pattern in the index of the metal is confirmed. Auto is 1.2% down, sideways momentum. Pharma flat. Momentum is bullish on the small on the short term, but medium term it is still sideways. So you may take it with take long positions with tight stops, because weekly charts also should show the momentum as bullish before we can confidently take things ahead. FMCG 1.7% down, sideways momentum. Realty 0.7% down, 7.7% down, sideways momentum. So all are sideways, except the bullishness is seen in pharma and metal. Metal may be really doing good, because the only thing is it is at a you just have to. So metal is only sector which is bullish, confirmed. Pharma is catching up. It is bullish on the medium term, on the short term, but medium term catching up cautiously. So metal, pharma, the sectors are all just remain in the sideways. You'll have to wait for it to catch up, at least in the short term. You need to look at the institutional participation back to 3,000 crores, 2,962 crores of selling happened today. Yesterday, historically, last 2 days they were buyers, Fyers were buyers, but that's all given up today. All that buying is given up today. Fyers continue the selling, and DAs did not buy much, and that's why market could not hold, and it fell down. And the USD INR, you can see that it is moving up again to the 76 levels. It had cooled off a little bit in the last several days, but seems like it is again heading to the all-time high kind of levels. Momentum is still in sideways, but so there may be some intervention from the RBI side that may be happening once it breaks out of this zone. So in order to push it down to this level where it is there. So never know. Whether they would allow it to go above the 77 kind of levels or not. But this is a crucial zone. Basically, rupee is weakened today also, and it's at all-time high levels. USD INR, US dollar, you can see that it is a green, and it is again stop the down, cool off, and then again attempt to go up. But momentum is sideways, so you can it may take a while before it can break out the 99.6 kind of levels. Global indices, Dow Jones, you can see that US markets are doing excellent for the last few days. Big bounce up, and the recovery of the previous support zone where it had slipped down below. The recovery of that has happened. It has comfortably closed above that, but momentum is at a very crucial stage. It is not climbed into the bullish ones, but the crossover trend, everything happened. So same with Nasdaq and same with S&P 500 also. All these US market indices are showing good bounce up from the support zones and reclaim the support from where it had slipped up comfortably. The momentum is on the edge and to climb into the bullish zones. So you have to keep a watch on that, especially pre-market next day. Crude oil is had cooled off nearly 27% in the last couple of weeks, but it seems to be it is climbing again and getting back to the 100 plus level of 106 or 7. It is rising now. Not good. Looks like going back to the higher levels. Momentum is sideways as of now, so that is a worry. Gold seems to be consolidating the support zone from where it had earlier broken down, and then an attempt to break out has failed, and then it is just trying to consolidate the famous long support zone, and it may be some sideways action that may be happening ahead. It may not crash down to the into the channel probably, and it may consolidate this current zone is what I feel like. Two actionables. Coromandel International Limited is a long call. Reason is it's climbed into the bullish zones in the momentum, broken out from a channel clearly, and trend is bullish, and medium term also it's bullish, not above average volume. Hindalco well within a channel, showing green candles, consistent move, and it may be trying to go up to the channel top mostly. So volumes are great. Metal sector as such is doing good. Momentum is on the edge of getting into the bullish zones. So once it is confirmed to sustain the bullish zones, you could get a swing trade till the top of the channel. Right, both are swing trades. To wrap up, neutral mild bearish combination is the short-term view for tomorrow. Neutral to mild bearish. Reasons: chart patterns, support resistance that we studied, these sideways momentum, the crossover of the trend, the Bollinger Band contraction short term, all of this combined, I'm concluding that my view is this, right? So you may look at the same different parameters that we analyze and conclude something else, right? But for me, it's mild bearish, and the markets has shown basically 10% of recovery. Last 2 days, 8 days up, super, and now it has gone above the Bollinger Band median, and then Bollinger Bands are indicating sideways, and then bearish engulfing pattern should tell us clearly the selling pressure that is there, the bull trap, and all this saying that you need to take some rest, some consolidation maybe ahead is what it indicates. And Fyers, look at this. There is absolute no support from the Fyers, continues to sell. So any close above 17,500 on Nifty and 37,500 on Bank Nifty may be positive, and both indices has to close above the 200-day MA comfortably. Nifty has already done that, Bank Nifty said to do that. That is when we can think about some up move. Until then, it may be this volatile consolidation on the medium term that may be happening. Bearish one day, bullish another day, and then one more day bullish, and then giving up everything and then side. So so basically those two levels has to be watched out. War talk, peace talks, all this happening, so uncertainty is still there in the market. Today also it is spiking. It is not ready to come down to the 20 below because uncertainty of the war and global crisis and inflation and Fed interest rate and all these things is already there. It remains to be there, continue to be there, right? So that is why you see the markets very volatile, even when there is a big up move of recovery that has happened, right? Positive factor is the 10% recovery that happened from the dip, and market is not ready to give up. So, but as long as there is a global crisis, war, kind of fear, uncertainty is there, nothing helps. No technical charts help, no positive factors would help much, because all the gains can get swept up from one bad news, right, report that comes in. So stay away from the market until the VIX cools off, and hedge your portfolio with gold or some other option strategies, or like code calls, or any other strategies in the option that gives rental income while your investments go down and which you don't want to sell off. Or if you want to invest also, you can do the same techniques, but always go for SIP mode investment for quality stocks when the market gives a tip, right? not at one shot. So you can always use the options instrument for speculative trades on using calendar spreads and vertical spreads. Always when there is a gap and when there is a overnight position, make sure that you have hedge positions. Otherwise, a gap up, overnight news event can wipe out all your profit in it in a night. In one day, everything can, your entire capital can get wiped out because you never know. So always have defined risk, for anything that you carry forward to the next. Intraday, as usual, it is, trending days are very rare. So you just have to patiently wait for the trending day and not trade on other days, or you should be an expert to understand read all the indicators and chart patterns and all properly to escape out of the V-shaped recoils. So that's my view for the day, for the next day. So if that helps you to frame your own view and trade plan for the next day, consider hitting the like button and share it with your friends. We have very few subscriptions, and your help in this regard will be highly appreciable. Thanks a lot for watching. Happy trading, happy learning. Bye.